There certainly seems to be a very, very large consensus among strategists and forecasters that that the ECB is going to do sovereign bond QE, and there's a lot of that consensus now saying that it's going to happen at the meeting on the 22nd of January. It's going to be announced on the meeting of the 22nd of January. For our perspective, we'd sort of not necessarily focus too much on whether or not the ECB is going to do QE, but the question that needs to be asked is whether it'll make a difference, whether it'll actually change things for the European economy and European assets. Because as you look around, it's hard to imagine that government bond QE is actually going to meaningfully push government sovereign bonds that much lower. German 10-year borrowing costs are already down at below 0.5%. Spanish and Italian borrowing costs are really not that much above that, considering the extra risk you're taking. And if you look at the currency, that's now down at 118, having fallen from 135, last year, so that's already cheapened quite a good deal as well. So, in reality, the thing that we'd focus on probably with regards to Europe is not so much whether or not there's going to be ECB QE, but are there signs of progress elsewhere in the economy? Are things brightening up a little bit? And on that prospect, I think there probably are. There are some decent signs. If you look at credit markets, they're starting to thaw a little bit. You saw actually consumer credit year on year turn positive towards the end of last year, and you also saw credit to non-financial corporations starting to get less negative year on year as we sort of entered the end of last year. So the ECB's already announced measures are starting to take hold, and we see this year sort of brightening a little bit for the Eurozone anyway, with or without QE. It's good news for India. You've certainly seen CPI come down markedly in the last few months. Certainly between June and November, you saw CPI go down from, I think, 8% to below 5%. And I think that's got to be good for real disposable income. So again, that should be positive for the Indian economy. The Indian equity market, did well last year for much of it. And we're not singling out Indian equities in particular. What we are singling out to clients is the whole Asia EM space, and that resurgent Indian economy is very much part of that story.